So should you go into trading or investing? So by the end of this video, you know exactly which is better for you. Depending on whether you're a scalper, day trader, swing trader, position trader, you'll be holding your trades from days to weeks. And if you're a long-term trader, then it will be months. Whereas for investing, you'll be investing for years and even decades for super good stocks. So this means that when it comes to trading, it doesn't require a lot of patience, okay? But when it comes to investing, you will need to wait. You need to be willing to wait a long time as compared to a trader for you to see your profits, because you can invest in a super good stocks today with good fundamental value, but within these few months, because markets are driven by fear and greed, emotions, your stock can still go down regardless of how good the company is. So in order for you to turn this into a profit, you gotta wait for the stock to reach the so-called mean, or in other words, intrinsic value of the stock, okay? The real fundamental value of the stock. So this means that if you're a trader, your risk tolerance would have to be higher as compared to an investor, because for investors, they seek stability and steady growth. So trading is more like speculation. You're going in and out within a short period of time. So whether you choose trading or investing also depends on your financial goals. So when you're trading, you are aiming to generate short-term income. So if your extended car warranty is due, okay, make sure they chase you for that, and you need that money now, then short-term trading can generate you that profits that you need for the short term. Maybe you need that money within the next few months, then you can consider short-term trading. But if you want to retire at 65, 50, 45, which is possible, then you would aim to invest long-term and then let your money compound. Then how about your personal lifestyle? Let's say if you have 4 kids, 2 dogs, you have no time, and then you got 2 jobs, you gotta study part-time too, then you got a hamster. You wouldn't want to go into trading too much because the time commitment is very high. You gotta monitor your charts more as compared to the long-term investor. So my parents, they are stock investors, okay? Personally, I invest in stocks too. Specifically, I do value investing, meaning I find undervalued stocks and then look at the intrinsic value. Normally, stock investors, we would look at a chart only once in a while, not every day. You can go on vacation for the whole month and you can just look at it one time, and that's enough. But for traders, especially if you're a day trader, you need to be in front of the charts more often to find trades. So if you have all those commitments, okay, you either piss those people off, do your own thing, look at the charts every single day, ignore all your family responsibilities, or you move to investing. But this is not enough, because I want to talk about the skills you need, the risk and reward, the probability of success. Now this is really important, okay? The time commitment to research, okay? So let's get into that. Now I want to talk a little bit about strategies, okay? The strategies that you will use in trading. Typical ones, trend following. Then this is also what I do, retracement trading. You wait for the price to revert to the mean. And then you have price action trading. And of course, there are many different strategies. I'm not going to talk about it here, okay? But these are the more popular ones. And when it comes to investing, this is my favorite, okay? And what I use to value investing. It is what is used by Benjamin Graham, Warren Buffett, Peter Lynch. Then you also have growth investing. So there's a difference between these two. Value investing, you would normally want to look at stocks that are below intrinsic value, whereas for growth investing, normally investors They would invest into stocks that have a high potential for growth. Of course, intrinsic value is very important, but they don't really look at that. Basically, they will look for high growth stocks. And if you are investing for regular passive income, then there's this strategy called dividend investing, meaning you just buy stocks that give you a regular dividend payment, just like Singapore stocks. They don't go up as much as compared to US stocks, okay? For US stocks, it's better to consider value investing, whereas if you want to buy Singapore stocks, it's better to just invest for dividends, because STI don't go up as much as compared to S&P 500 in the long term. So by looking at this means that the skills you need, okay, you're gonna have the ability to read charts. So mainly technical analysis, but don't clutter your chart with spider webs. Technical analysis, okay? If you're a long-term trader, like a position trader, you would need to look at fundamental analysis, okay? Because if you look at global macro traders like Paul Tudor Jones, George Soros, they are all global macro traders. If you're investing in stocks, want to look for value, then you would need to look at the financial ratios and also financial statements. Basically, income statement, balance sheet, and also cash flow statement. So basically, fundamental analysis, okay? And it's very important to look at the business cycle as well, because it's gonna affect the various sectors, industries, which sector will do well, which sector will underperform the S&P 500, okay? Fundamental analysis. Now, you don't need a finance background to master financial statements. To master financial statements, you just need basic secondary school math, and then you can master it. You just need to put in the time. So the next difference is the stress levels. If you are a trader, it is more stressful, but also more exciting. So some people treat trading like a casino, and they just do it because they want to gamble. Whereas for investing, it is less stressful, but then also more boring. So the thing is, when you're bored as shit at home as an investor, it is very tempting for you to move into trading. When it comes to trading, it is riskier, and also your portfolio will be subjected to a higher volatility. So the beta is going to be a lot higher as compared to if you're an investor. A lot of traders also like to use high leverage. Okay, don't pick a broker that gives you 1:1000, 1:500, because those are just marketing tools that they use to entice you to join. The best traders that I know, they use low leverage. Only use high leverage, but not too high, when you are experienced and you know what you're doing. Don't use high leverage just so that you can flip your accounts fast. People teach you that because they don't know how to manage risk. So think about that. Investing is lower risk as compared to trading. Because if you think about it in the long term, the stock market is going to go up. You think in terms of probability, that probability is already on your side. So with high risk, means that trading also gives you a higher reward. Depending whether you're a value investor, growth investor, dividend investor, it can range from average 10 to 20% per year, which is already very good because the stock market index goes up by 8 to 10% per year on average. Whereas for trading, you can get up to 5 to 20% per month. But then with trading, you only can profit from capital gains. Whereas for investing, you can not only profit from capital gains, you can profit from dividends and also stock splits, okay? And some more, when you let your profits compound, using the power of compounding, let your money work hard for you, it is so-called more efficient as compared to if you are a trader. So this explains why the percentage of investors that make money is higher as compared to percentage of traders that make money. Because if you think about the success percentage, you probably didn't know this, 90% of traders lose money. Means only about 10% of them make money. Whereas for investing, there's no consensus when it comes to the exact number, but the success rate is definitely a lot higher as compared to traders. But the good thing is, if you love the challenge, I don't want to be like everybody, because it is hard, that's why I want it, then this is a good challenge for you. This is why people climb Mount Everest instead of the typical, normal, average hills that you see in Singapore. But aside from all these things, I also want to talk about costs and taxes, which are very important, because you don't want to make a broker rich, you want to make you rich. Now, how about the time commitment that you need to put in to do the research? If you're more of a technical trader, you're looking at technical analysis, then your research is not as long as compared to an investor, because when it comes to be an investor, reading financial statements, annual reports, constantly keeping up with the macro factors, economic changes, technological trends, it is very daunting for a lot of people. The research process is time consuming, okay? The preparation is time consuming as compared to trading. But then once you've made that investment, you can sit back and relax, whereas for traders, they can do it again and again and again every day. So do you want to put in the work up front to research, or would you prefer to put in a little bit of work every single day? But of course, if you're a position trader, okay, then you would need to research more on the macro factors. You gotta look at the fundamental factors more and do your research. So this means that the longer your time horizon, the more upfront research you gotta put in. And there are a lot of investing websites out there that you can use to do your research. But one of the websites that I use is Seeking Alpha. In this website, you can get a lot of your investment ideas and also the latest stock market updates. So one of the services that they are offering is Alpha Picks, okay, on the left hand side over here. So I'm just gonna go ahead and click on this to show you what is it that they are offering, okay? So I'll just log in right now to show you everything that's inside. So right now we are inside Alpha Picks, and basically this is actually a stock recommendation tool, okay? So you can see over here under portfolio, you have stocks that are picked up for you, and Seeking Alpha has a very strong quantitative analysis team that are going to evaluate stocks, good stocks for you to invest in the long term. And they also use a very sophisticated algorithm that is going to analyze stocks based on their value, growth, profitability factors, EPS revision factors, and then they are going to filter up good stocks and then list them down here. So these are some of the examples that were picked in the past. And you can see the returns over here, sectors, and when you click into the individual stocks, you can see the overall rationale as to why did they pick this stock, okay? So they are going to give you a good summary. So they are going to have a very detailed report, and you can go through this in your free time. And if you are wondering how well are the stock picks, you can see that over here. The stocks picked by the algorithm and the analysis team generated 123% plus over the past 2 years since July 2022, okay? Whereas the S&P 500 generated 44%, which is still good, but Alpha Picks massively outperformed the S&P 500. And you can see over here the ratings are hold, but then if the stock is a good buy, there's going to be a strong buy rating, okay? And of course, you can rely on these analysis as a confirmation for your own analysis, because if you have been on this channel for a long time now, you know that I don't recommend you following other people's recommendations blindly. At the end of the day, you still need to do your own research, and then you use all of these analysis as a confirmation for your own analysis. So if you want to know how to sign up, then I'll put the link down in the description below. And from now until 6th of July, they're actually running a promotion. So normally they charge $4.99, and then right now it is discounted to $4.49. And then you also get like 30 days of Seeking Alpha Premium, which is a premium service that they offer. And basically what Seeking Alpha Premium gives you are extra screeners, more tools, quant ratings and unlimited analysis. Okay, let me just show you real quick. So you can see over here, this is what you get when you upgrade to Alpha Premium. Okay, so you can see over here, you get a list of top rated stocks. Okay, and this is the summary. You can also check the tradings tab, dividends tab, earnings tab, and it's going to give you all the ratings. And then if you invest in ETFs also, there's also a top rated ETF list with a quant rating of buy or strong buy. Okay, so it's going to recommend you good ETFs to buy right now, as well as a stock screener that you can use, and also ETF screener. And all these screeners are going to help you filter out good investing opportunities. Okay, and if you have a current portfolio, you can also create a portfolio over here. So let's say if you already have a couple of stocks that you are invested into or you want to invest into, so you can add symbol over here. Let's say if you want to invest into Google, then you can pick Google over here. Just key in all your stocks and then you will see your portfolio. So this is an example portfolio that I've created. Okay, so it's going to show you your rating, your overall rating out of 5. Is this a strong buy, neutral, and how does it compare as compared to all the portfolios? So there's going to be a diagnosis over here. Your portfolio is in the top 55% of all portfolios. So basically, it's a very detailed report that's customized to your own specific needs. Okay, so if you're interested to sign up for this as well, I'll put the link down in the description below as well as in the pinned comment. Now, when it comes to cost of trading, of opening, executing a trade, trading is a lot higher because you're opening a lot of trades, paying a lot of spread if you trade stocks, then commissions as well. Even though a lot of brokers nowadays, they offer commission-free trading, but because you're opening so many trades, okay, you're making your broker rich at the same time. Whereas for investing, the costs are lower because investors only pay the fees when they buy the stock and when they sell the stock. So the long-term cumulative cost of investing is a lot lower as compared to trading. And if you're good in gaming, and you're good with your hands, then trading is more suitable for you because timing when it comes to trading is very important. For investors, it doesn't mean that you can enter anywhere you like, because you still gotta enter at a good price, have a good margin of safety, at least 50%. But it's less important as compared to trading. As long as you enter when it is below the intrinsic value with a good margin of safety, then in the long term, you're going to be fine. And the next thing, okay, this is what you can't avoid: taxation. So in Singapore, capital gains is not taxed. So you gotta check with your country regulations, because some countries, they do tax you on your short-term capital gains. Whereas for most countries, okay, again, check with your country regulations, you won't be taxed only if you hold it for more than 1 year. Okay? And this is a difference that a lot of people don't talk about. The tools that you need, meaning the infrastructure. I realize that a lot of traders that I know, I gotta use a lot of screens. The maximum I can go is 3 screens. Beyond that, I'm hallucinating. Because traders are in front of the screen so much, so they gotta make it as efficient as possible, so they require more screens. So I went to several investment bank trading floors in Singapore, okay, when I was studying for my finance degree. Each table has at least 6 screens, excluding their iPad and phone. I have one friend whose table, just one table, 20 screens. Whereas for investors, because they're not looking at the screen so much, you can just invest using an iPad with one computer, one laptop. That's it. And back in the good old days, we use hard copy annual reports, not even like soft copy. Now this part is my favorite, okay? Role models, not Ringgit Malaysia. Role models to look up to when it comes to trading. And these are people that I study. You can study them as well. Jesse Livermore, okay? Even though his ending is quite sad, but then like read his inspiring story before he killed himself. And also Paul Tudor Jones. Paul Tudor Jones. He's a global macro hedge fund manager, global macro trader. Go and study him as well. Whereas for investing, value investing specifically, I study Warren Buffett a lot, Peter Lynch, and then also Benjamin Graham. If you want to master value investing, these three are the one. Or alternatively, fly to New York, Columbia Business School, attend a value investing class, a course, which I'm planning to one day. Can somebody sponsor me though? But this one very important aspect is the similarities between trading and investing. This is what a lot of people are not willing to put in: time and patience. Not to wait for a profit, but to study to master the skill. You'll be surprised to know that most investors, they buy stocks just because their taxi driver recommended it. Stop taking taxis. A lot of people buy meme stocks. Why do you buy it? Because like everybody's buying it. If your only reason for buying something is because other people are buying it, then you shouldn't be buying it. Think about that. And with the right mindset, risk management, both can be profitable. And you will increase your chances of it working out for you if you pick the one that suits your personal lifestyle, risk tolerance, and personality. And also if you learn from the right people. Both require very good, solid risk management. Okay? Both require super strong discipline, especially as an investor. A lot of times as a value investor, you need to be willing to be a contrarian. When everybody is buying all the stocks that are trending, rallying right now, you gotta be willing to look at stocks that are currently undervalued, that are boring, that not a lot of people are looking at. It is hard. It is hard. But this is how the top value investors make their big bucks. And both require you to constantly keep up with news, changing trends, macro factors, business cycles, Kardashians. Meaning no matter how successful of a trader investor you are, you cannot stop learning. Warren Buffett reads at least 6 hours every single day. The top CEOs in the world read at least 50 books a year. And they are CEOs. So what is your excuse? I read at least 6 hours every single day, while balancing competitive swimming, marathons, all that shit that I don't want to do. So which one is for you? Based on the factors that I showed you just now, you decide. But personally, I do both. If you're a trader right now, just a trader, consider putting some of your capital into investing so that you can let your money work for you. Okay? But if you really have no time to learn investing, then you can put your money into a low-cost index fund. Okay? Mutual funds, even though they manage money for you, but then after you take into account of the cost management fees, you're not going to earn much from that. So the best thing to do is to put your money into ETFs, but not just any ETF, because if you look at STI, in the long term, it doesn't really go up that much. US stocks specifically, okay? And don't need to consider bond ETFs, commodity ETFs, because the returns still underperform the US stock market ETFs. Let me know down in the comment section below which one are you and which one do you prefer and why. So with that, I'll talk to you in the next video. Bye.